Welcome to Commodities, and here we're looking at gold on the 4-hour chart. Everything's going according to plan. We were looking at the resistance from this particular trend line through here as pegging the top in through there and looking for a corrective pattern across the 1310. So let's dive in and have a look at that. But just before we do that, in the bigger picture here, this move here is in 3 waves, so it can be corrective and it can fail from here. Support back on the 1310 would help the case for the upside. Right, so on the 1-hour chart here, we were counting 5 waves up through here, so we were looking for a counter trend here, and that's going according to plan, but the 61.8 retracement level is still down here at the 1295, 1290 sort of area, so that's possible. Let's just go in and have a little look at this here, but the main point here is support on the 1310 next time round would create the long trade. But don't jump the gun because it could come back further. And in looking at that, I can see that the A wave here is fine in nice little 5-wave sequence here, and the B wave in 3 waves is all intact. But the C wave here that should be in 5 waves, it should look a little bit like the A wave here, is not. It's got overlapping wave structures. It's just a little bit messy, so I'm unsure about it, so that's why I'm saying it could pull back down through here first. However, if this moved up from here in terms of 1 and 2 and 3 and 4 and 5, then look to go long again on the 1310 there. It's as simple as that. The silver market, the gold market is overbought as well, so the silver market, oversold rather, so these on the daily. So the silver market here, we're looking for, yesterday we were at wave 3 here and looking for wave 4 to pull back. Wave 4s can be a little bit tricky and tend to move sideways, so it may not be finished, but it does appear to be finished, but we'd need to see a bit more of a push to the upside here. But yes, look, wave 1, wave 2, wave 3, wave 4 normally pulls back to the wave 4 of 1 lesser degree, or 38% roughly from the third wave here. So it's quite plausible that if this is completed, then we'll see a move close to the major trading level 2 here. And the extensions in wave 3, so wave 1 and wave 5 will be roughly the same, so something to look at. And then we would get the A, the B and the C that would pull back first of all into the group 2 area here that was resistance, will eventually become support, or it could pull back through to here. The other way to look at that is the 61.8 retracement level from this area here, so it would be looking down from down this point here, but I feel that the midpoint would be the 1950 would be about right here. But anyway, let's see how that goes. Trading opportunities, sure, off buy new highs. Otherwise, wait for the reaction from the 20 here, and we'll pick it up from that point. That was the original plan, and then adding on top of the 2000 when we get there as well. All right, the copper market, sort of wave 4's become a bit sort of cumbersome, quite large, but I figure that's just, it got there first, so it's just sort of moving in line with precious metals in a sense, so they're both sort of a bit softish and correcting and so forth. So yeah, let's just sort of see how this goes here. As I mentioned yesterday, that buying on 306 as support would be the go. So just wait for that, because this move down through here can be impulsive, and this one here still looks a bit corrective. And what I mean by that is it's just got overlapping wave structures here, so it could be the alternative ABC correction here, and we could be looking for short. So on the short side here, you'd want to have the 305 as resistance and then put the stop up through to here, or sell new lows from this point here, because essentially we do have a 3-wave structure here, which can be the ABC, and in the bigger picture we were looking for a bearish move. So we're kind of in a bit of a junction here, so whatever comes out of here, if if we get 5 waves off this low here, that means that after the 5 waves we'll get an ABC, but because we get 5 waves in the opposite direction here, we'll get another 5 waves, which will take us above the 310. So this is really the corner of being bearish or bullish on this particular market here. So that's why the gold market hasn't proved itself just yet either, because it's you know, moved up. So that's why the 310 support is critical as well. Very subtle but very important points that we're talking about here. The oil market is back above 100, and we need to look at this now in this little section here. We need to look at this as being 5 waves up through to here. So basically wave 1, wave 2, wave 3 is in progress, wave 4 and wave 5 to 101, but that can also be the A, the B and the C wave here and fail here. You know, originally had this as wave C here and would be moving up from here, if you remember, and look to go long on here, but there is a possibility for a larger bearish picture to unfold, and this is why we've got wave 1 here and ABC for wave 2 here, and then moving down. But it's important to trade what we see. So developing support on 100 would have to put you on the long side with a stop under here. The gas market is on track as well. So we were looking, if you remember, we were looking for an A wave, a B wave and a C wave in 5 waves, 3, 4 and 5 down through to here on the 465, the lower level of group 2, and now we can start to see this market move to the upside here. I've labeled it as impulsive 3, 4, 5, but it can be ABC, but it is moving in an impulsive manner and has the personality of a third wave. So we can see a 4th wave across the 480 and then wave 5 higher, and then an ABC correction back into the 480, and then our move up higher to the $5 area. The soybean market, right, so yes, look, just on the bigger picture here first, it is possible that this is the A, the B and the C here in blue here, and making wave 4 here, and we push straight up and make new highs here. That's a real case from that point of view. But also it also can be an A, a B and a C for the A wave, a B wave and a C wave coming down here a little bit further. So both of them are both valid, and yeah, and as I mentioned before, it's probably important that we do risk a little bit of capital on the on this current low here. Once we've got confirmation here, you know, to glean you know, 1 or 2 positions in this space here, because if we do get support on here, then we've got a little bit under our belts from there. So what we're going to do is we're going to have a look at this structure here. So we either need well, we need 5 waves really. Let's go in and have a little look at that. So yesterday we were looking at this being wave 4 here and moving down for wave 5 here. So we can pretty much call that completed now, and just drilling in here a little bit further, just tracking those little 5 waves here. And look, now we have 5 waves. When I was looking at this a little bit earlier, we only had 1, 2 and 3 here, but now we got 5. Okay, so now we want to buy the pullback from this area through here. So after 5 waves becomes a corrective pattern. So you want to buy any pullbacks from here as such. This should break this trend line through here. And if you can't work that out, then you can start to buy in group 2, which is the 65, 72 and the 80. The 72 is the safest as support. So I'll just leave that with you there, because it depends on how it unfolds. But you can see 1, 2, 3, 4 and 5 moving up through to here. So we should find resistance coming into the 65 area and retesting the 1460 area here as support. So, you know, you can go there, or you can just buy now and put the stop under here and, you know, work it a bit later. But if you can get a position in this area here and a position above here, that should just about do us actually the time we get to here, because if it fails up here, just because this is all about the retest of 1500 now. So if we've got positions here and here, don't go buying in here, because this is where the high risk area is. We really need to be on the other side there, because if we've got positions here and the market moves up to here, then folds back down, we'll be able to recognize it by that stage, and we'll be able to protect ourselves better. So yeah, look, buy now. As they say, buy now and save. Wheat. Right. Well, this is the count that we've got for it, and we're seeing it push higher overnight, which is good. We're seeing the US dollar drop below the 79.50, so that's a trigger not only for the other currencies but for commodities as well. So the idea is to build a trade, off the 700, and having a target at 800 here. That's our sort of go. So we're looking to pretty much add at each 10 points. So you can add on 740 as well if you like, depending on the contracts here are a bit more expensive on the deposit side of things, but I think that's actually a good thing, because it really keeps the leverage in check as well. And with futures contracts, there's no overnight financing, so it's not like trading spot. We can afford to trade the trends here because we don't have the overnight financing. There's no overnight financing on futures contracts, and you need to understand that when you're trading indices as well. If you're trading spot or you're trading the futures contract, if you're holding overnight anyway. Drilling into here a little bit, what we sort of recognized here is that we had 5 waves from this point here to here, so we could, and then we got a new high here, so we can label this as wave 1. But the thing here is that from 700 here, we've got 5 waves up. 1, 2, 3, 4, 5. We can drill into that. So after 5 waves, we should see an ABC correction. The 61.8 would be at 717 here, so that's possible. Let's just drill in here a little bit. So here are the 5 waves off the 700 here. A little bit dodgy in here, but 1, 2, 3, 4, and 5 for wave 1. Wave 2, wave 3, ABC for wave 4, and wave 5 here. We can see that as this market moves up here, the corrections are expanding, aren't they? I mean, this correction in here is smaller than this one here, larger, isn't it? So everything's like expanding to the upside here. So it does help us, identify the trend as such. However, in this case here, we can see it's possible to have the ABC back into here, covering this gap here at 717, the 61.8 retracement level, and then moving up there further. This is all about finding support on 730, which is the top of group 1, the 30 there. Once that is confirmed, I would say that it's confirmed here, but I'd like to see this move up here corrected first, and then developing support there, and that would be the safety. Yeah, look, the idea is to build trades on each of these levels up to the 50 there, and we'll sit tight from that point there. The corn market has moved up as well, and yeah, look, we're going long in that yesterday, and continue to do that. So adding to the next position will be on 520, but you can also see too that it's obviously the old high here, so there's going to be problems here. So we could pretty much look at this as being, let's get my drawing tool working here. We've got wave 1, wave 2, wave 3, wave 4 coming across here in some way or another, wave 5 pushing probably up here somewhere, an A and a B and a C, and then looking further up there like that. So look, trying to match the Elliott Wave count corrections with the levels, the psychology where the orders will be placed is the likely scenario. Not always accurate, but right most of the time, and that's all that we need. So the idea is to continue to add to this. The other main point here that needs to be told as well is that really we do have 3 waves up here, which can be counted as corrective, as an A and a B and a C wave up here. But because it's moved so strongly, it's got the personality of a 3rd wave. So that's how we'll see that. But look, expect corrections across here, and you might be able to pick this back up, not at 520, but after a reaction here, you might be able to pick it up at 516 again. The coffee market, no change. Look, if the 210 becomes support, we'll be going long, but otherwise we're expecting a move lower, and nothing to do here. The sugar market has broken lower as well, but I'm not going to change the triangle pattern just yet, because I've seen Elliott patterns before where wave E here takes out the lows of wave C here, and basically it's a bit of a bear trap. So I think that we should just allow, before turning bearish, would turn bearish if the 17 became the retested resistance, and we'll get a trade down to 1650, the medium level. But I think that we need to allow this to roll out a little bit. So from the B wave here, down for 1, back for 2, down for 3, 4, and 5 for this C wave to finish here. And I can see here that we've still probably got a little bit more to come down into this little area here. So let's allow that to finish, and then if we get support, or we get impulse waves up here and we get support on the 1730, then we'll look at going long again. So as I mentioned, sometimes, if you're really trying to nail the low and catch the next largest trend, it can take a little while to get into it. Sometimes you get it, sometimes you don't. Sometimes it takes 2 times, sometimes it takes 3 times. It's just the way the cookie crumbles, and it is tricky business. But managing the risk, keeping it in perspective is the go. Right, orange juice. Look, I've given this a little bit of thought here, and this spike here, if we took that spike out here and forgot about that, then we would have a nice 5-wave structure with a 3rd wave in here, 4th wave and 5th wave to here. Then we could look at the 50-60% retracement level coming down to the 159 area. And so that's what I think, that we've got an impulse wave here. We're seeing a correction here, a bit hard to read, as you can see. It's a bit it's a bit light on, but we were looking at if the 161 became the support, then we'd go long. But I think that now, if the support comes in on 160, now that it's traded below that, and it'd be even better still if it came down to the 159 and then went back up, then I think we've got a long position at that point there. The daily's oversold. There's still momentum to the downside, but I think that might be all right. So look, long on 160 rather than 161 now. Okay. I'm just going to look at point at the US dollar here, because in case you don't watch the Forex thing, look, basically we're looking for this is sort of a lows going right through here to April and March, but we're looking for a break of the 79.50, and you can see we've clearly got that now. We'll be looking down around the 77 area for this. There will be bounces, but it does give commodities a little bit more strength to the upside, and kind of looking for that, and that's why we've seen that. We've seen this strong move down here for whatever reasons, and we're seeing the reverse of that in commodities. Alrighty, I think that covers that. All good. Cheers.